everyone. Today I will be presenting the Bradshaw versus Business Cycle Fund, which is the result of my investment of $100,000 into the stock market. So upon my Uncle Vladimir's passing, he gave me $100 to invest in the stock market, but this came with some stipulations. I had to invest this money into at least 5 companies, and I had to hold the stock for 10 weeks. So the 5 companies I invested in were Jpmorgan Chase Co, Amazon, Delta, NVIDIA, and Kellogg's. And the reason why I named my fund the Bradshaw versus Business Cycle Fund is because in our class we talked a lot about whether we were at the expansionary phase of the economy or the recessionary phase of the economy. And one of the indicators of that is the stock market. And as you will see from the results of my portfolio, my stocks went down a lot, thus leading me to believe that we are at the contractionary phase of the economy. So the first stock I invested in was Amazon.com Incorporated. Amazon was founded in 1994 by Jeff Bezos as an online bookstore, and it went IPO on May 15, 1997. That same year, it was sued by Barnes & Noble because Amazon claimed to be the world's largest bookstore, and Barnes & Noble said that Amazon was not a bookstore, but a book broker. The next year, it was sued by Walmart because they alleged that Amazon was stealing Walmart trade secrets by hiring lots of Walmart's top executives. So today, Amazon sells virtually anything you can think of: clothing, technology, furniture, games, and they're involved in lots of technological development with artificial intelligence and cloud software. They release a lot of their own technology. And Amazon has a lot of cash flow, and it has a very high PE ratio. It's around 140. This means that people are expecting Amazon to grow a lot in the future and have very high earnings. So I purchased Amazon because when we purchased our stocks on October 5th, we were experiencing a period with a low unemployment rate and a high rate of GDP growth. This leads to an increase in consumer confidence and an increase in consumer spending. Amazon dominates the retail market. As I mentioned, it sells virtually anything you could think of. Thus, if consumers are spending a lot of their money, this means that a lot of this money will be going to Amazon. So I bought 10 shares of Amazon at $2,008.80 each. I liquidated these shares at $1,629.13, thus giving me a total loss of $3,796.70. So, as you can see here, the Amazon stock went down at the beginning of October due to rising interest rates, because when interest rates rise, people feel like they have less money in their pocket to spend, and thus they're not going to be spending it on consumer goods that Amazon offers. And then towards the end of October, Amazon stock plummeted here because they released disappointing Q3 earnings, which really hurt the company. However, the stock went up over here after the G20 summit because people had a positive outlook on US-China trade relations in the future, and lots of goods that Amazon sells are manufactured in China. Thus, having a good relationship between the US and China benefits Amazon's company and makes it more profitable. The next stock I invested in was Delta Airlines Incorporated. So Delta was founded in Macon, Georgia in 1924 as a crop dusting operation, and in 1928, Colin E. Woolman purchased the company and renamed it the Delta Air Service. The company went IPO in 2007, and that year, Delta emerged from bankruptcy and merged with Northwest Airlines. So the IPO, they started selling shares of the result of this merger with Northwest Airlines. So I purchased Delta because fuel cost is a major resource cost for airlines. So I believe that we had hit a peak in oil prices and that they would begin to fall. And when oil prices fall, airlines such as Delta have to spend less money on resources, thus increasing their profit and making investing in their company more profitable. Also, the holiday time is the prime travel season, and I knew that we would be holding these stocks through Thanksgiving and toward the beginning of December when people travel for the holidays, so I knew that Delta would be getting a lot of business during this time. So I bought 353 shares of Delta at $56.60 each, and I liquidated these shares at $56.07. Thus, my total loss was $187.09. So Delta was relatively strong compared to the rest of the stocks in my portfolio because although the market was down as a whole and experiencing a period of correction, Delta benefited from the lowering fuel costs, which made the loss very minimal. So as you can see here, at the beginning of October, the Delta stock price went down because fuel costs continued to increase after Hurricane Florence, thus decreasing Delta's profit and making investing in the company less attractive. But as you can see throughout here, falling oil prices increased Delta's profit, and oil prices fell due to weaker Iran sanctions and increased output from OPEC countries. So oil prices peaked on October 3rd at $76.40 per barrel and continued to fall from there. The next stock I invested in was NVIDIA Corporation. So NVIDIA was founded in April of 1993 by Jensen Huang, Chris Malachowski, and Curtis Crean. NVIDIA makes graphics processing software and personal computing software. And they designed the graphics for Microsoft's Xbox and Sony's PlayStation 3. In 2007, they were named Forbes Company of the Year. And today, Toyota will use NVIDIA's artificial intelligence software in its autonomous cars, and Google will use NVIDIA's artificial intelligence software in its Google Cloud platform. So I purchased NVIDIA because during periods of economic expansion, when there is a low unemployment rate and a high rate of GDP growth, as we saw in the beginning of October when we purchased these stocks, you can get the best return on riskier tech stocks. So as you can see, I was very bullish on the tech market. I invested in Amazon and NVIDIA because I believed that investing in these riskier stocks would yield me a higher return, as I expected in the business cycle to still be in the expansionary phase throughout the duration of this project. So I bought 69 shares of NVIDIA at $288.74 each, and I liquidated these shares at $147.61 each. Thus, my total loss was $9,737.97. Almost half of my initial investment was gone. So NVIDIA stock fell here due to rising interest rates. Because again, when interest rates rise, people have less money in their pockets to spend, and thus won't buy goods such as the Xbox or the PlayStation, goods that NVIDIA uses their processors in. And over here, the stock fell even more due to many factors. The trade war with China. NVIDIA uses its processors in lots of video games, as I showed before. So China is very influential in the video game market. So if US-China relations are bad, this will hurt NVIDIA because it hurts the video game market as a whole. Additionally, NVIDIA released disappointing Q3 earnings, which caused the stock to fall 19% in one day. Additionally, Apple announced that they were going to be decreasing their iPhone production, and NVIDIA processors are used in Apple iPhones, so this hurts NVIDIA as well. So NVIDIA was a dog stock throughout the entire duration of the project. It just kept going down, which was very disappointing to me, as, again, I expected NVIDIA to be my best stock. It was a risky investment, but I thought it would pay off. The next stock I invested in was Jpmorgan Chase Co. So Jpmorgan Chase Co. can date back to the Bank of the Manhattan Company, founded in 1799 by Aaron Burr, which later turned into Chase Manhattan Bank in 1995. And Jpmorgan Chase was founded by the mergers of several banks, and the current state of the bank as Jpmorgan Chase has existed since 1996. So today, Jpmorgan Chase is a multinational investment bank and financial services company. I invested in Jpmorgan Chase because I knew that the Federal Reserve Chairman Jerome Powell would be increasing interest rates throughout the duration of October. And when interest rates rise, banks have to pay more money for the money they put in their banks. However, they charge even more money relative to that on interest for the loans they give out. So this spread differential results in more profit for banks. Thus, when interest rates rise, it is beneficial to invest in banks. However, the conditions for this are that the market still experiences a period of growth, and this unfortunately did not happen throughout the project, so I was still hurt by investing in Jpmorgan. I bought 176 shares of Jpmorgan at $113.50 each, and I sold my shares at $103.29. So I lost a total of $1,796.96. So Jpmorgan stock went up towards the end of October with positive Q3 earnings that they released. But then at the very end of October, the stock went down again due to economic worry with the US and China, because China released that their consumption had downgraded, so they were consuming less, which hurts the international economy as a whole, and especially the United States. So the stock did go up over here due to a dovish outlook from the Federal Reserve. The Federal Reserve said that interest rates were just below neutral, which reassured the market as a whole. And the stock market is very based on people's emotions. So when people believe that the economy still has potential to grow, then the stock market will do better, as opposed to over here in October when people were very worried about rising interest rates. The last stock I invested in was Kellogg Company. So Kellogg Company was founded by two brothers. It was originally the Battle Creek Sanitarium Health Food Company and was founded in 1898. 10 years later, this merged with the Sanitas Nut Food Company to become Kellogg Food Company. It went IPO in 1952, and today Kellogg is the second largest snack food company in the world, and it's behind PepsiCo. So I purchased Kellogg because demand for basic food goods such that Kellogg provides is not cyclical. It will remain steady despite any extraneous events, and I knew that we would be purchasing our stocks during hurricane season and during a period of rising interest rates. I wanted to stick to the fundamentals. I knew that Kellogg stock would be steady for me. It's a blue chip stock and thus is a very reliable investment. I bought 286 shares of Kellogg for $69.89 each, and I liquidated these shares at $60.84. So my total loss was $2,588.30. So Kellogg's stock really fell at the beginning of November due to a disappointing Q3 earnings report that really hurt the company. Also, it announced at the end of November that it was considering selling its fruit snacks and cookies businesses, which also hurt the stock greatly. However, it should be noted that my prediction of Kellogg's earnings remaining steady despite rising interest rates did happen, as if you looked at the rest of my stocks, you could see that there was a decrease in the stock price throughout October due to the period of the Federal Reserve rising interest rates, but Kellogg remains steady around here. So my overall portfolio finished at $81,892.98. So that means I lost a total of $1,107.02. So the stock market proved to be very bearish, which is something that I was not expecting. And for comparison, here is the Dow Jones. So the Dow Jones was down about 8% throughout the period of investment in this project, and my stock was down almost 18%, so almost 10% more. So as you can see, my portfolio definitely performed worse than the stock market did as a whole throughout this period. So the current value of my portfolio today was $78,019.93. So overall, I feel that I learned a lot about investing in the stock market from this project, and I hope that you could learn from some of the mistakes I made. For example, I wrongly thought that we would be experiencing a period of economic expansion, when in fact it turns that the stock market went through a period of correction, so stocks fell. I invested in 2 tech stocks, and this really hurt my portfolio. So I really enjoyed investing my Uncle Vladimir's money, even though I lost $18,000. I had a lot of fun and learned a lot about the stock market. So thank you for listening to my presentation.